Good night, welcome back to another schema scalper video. Today we're going to be looking at session times and when to find the high and low of the day. When, I'm saying when because we're looking at times, I'm not saying where. So this is exactly when you'll find one of the extremes of the day. This doesn't happen 100% of the time. It happens closer to like 80, 75 to 80% of the time, I would say. Oh, that's what my study stats have shown. So we're starting on 16 November 2023. We're gonna be pushing all the way to the new year. Yeah. So the time we're going to be looking at is 0200 to 0500, and this is New York time or Eastern Standard Time. So let's get into it. I'm just gonna show you guys that this works. You can catch low and day, high the day trades, and it's proper insane. So we're on a 15-minute chart. This is usually where I just throw out the times, but when you're doing entries, enter from a 5-minute chart, just because I'll show you later on in the video. If you're using a 15-minute chart and you start at 2 o'clock and you highlight all the times until the 5 o'clock candle, you will realize that it includes the time all the way up to 5:14, so 40 minutes past 5, and the closing of that candle. And you don't want that extra 14 minutes. You just want to end your session of trading at 5 on the dot, and don't look for any other entries after that. Not for the day, for that session. So I'll show you now. 5, this high, so that's the range. And you can think, oh, this is cherry picked. This is just the first one. We'll go through all the way to New Year's, and you can see that's like a month and a half worth of data. Like what's it? Gonna be about 30 trading days of data, and you'll see it happens more often than not. So this is low of the day, and you can see that because it's actually the lowest point in the day. It's literally the lowest point in the day, 3 o'clock. That's the lowest point in the day. Continue forward. Oh, sorry, it's a super hot day here, so my MacBook's overheating. Okay, now next day, yeah, I didn't upgrade as well. Don't need that crap. Next day, we'll mark out. So this is Friday. I'll mark out the end of Friday. It's 1700. Okay. Mark out the end of Friday. We'll mark 2 o'clock till 5 o'clock. Again, you see low of the day. So here you'll see the low of the day being made 2 days in a row at this time. It doesn't mean that the low of the day is going to be made every single day at this time. Sometimes it's the high of the day, and you will see in the examples coming up, I can see it now because I've just trained my eye to see that super quickly. So this is Monday's trading. Okay, so I don't think we have it here. Just mark out the Tuesday. $2 o'clock. And let's see what time that is. That's 5 o'clock. So it does happen there again. I thought that was outside of our time, but it happens again. And that's the high for the morning. It gets run out all the way through. But if you ended up here, you could still take profit inside there. But the true high of the day would come in at, oh sorry, true low of the day 6:15. That would be a true low of the day. The heat is too much. That's the low of the day. Oh, so slow. Come on, man. Okay, let's go 2 o'clock to 5 o'clock. You get really close to the low of the day, but it's not the low of the day, so we don't count it. And now you'll see times when this was maybe the expected low of the day, or this expected high of the day, and it gets run out at a certain time. We'll go through that in the next video. I'll just show you what times those highs or lows usually get run out and get reversed from, or when there's a continuation from certain levels, and where in time there's certain times where there's reversals and continuations. So this is expected low of the day, get run out, expected high of the day, gets run out. And the high of the day comes in at this time, 7:15. 2 o'clock till, I think that's a 5 o'clock candle. That is the low of the day being made, as well as a potential high of day, because it expanded so far. Yep. Low of day. High of day. Law of day. Come on. Fat fingers. And you look at this as potential high of day, but because of this big movement up, you kind of rule it out. Kind of. And also there's an extended move over a long period of time, or not long, a period of time. It wasn't straight up movement like this candle over here on Thursday, so that could disqualify the market. Okay, now we looked at, let's start it. I think at 2 weeks. Oh, I started on a Thursday. Okay, we've looked at 7 days trading. It happened once, twice, not 3 times. Once, twice, 3 times, 4 times. That made half day as well, so could say 5 times. No, 4 times. 1, 2, 3, 4. So made the high or low of the day 4 times during this, what's it, not even 2 week trading period. About 3, 6, 7 days. I'm gonna go forward and do another week, and then we look at the stats after that. I'm just gonna do it super quick. I'm not gonna speak. Okay. Okay, now we've looked at what's it like 12 days, and we're going to see when it actually created the low or high of the day, how many days. Also, certain months has certain tendencies. So if you're trying to use this, just take your month, the upcoming month. So now we are in February. I think it's like the 1st or 2nd of February. Let me check the date. Today's the 3rd of February. Being in February, you need to do this for like the past 3 years for February to see if this time is actually the best to trade. This morning from 2 till 5 a.m. New York time, or if you should incorporate another time of day to try and catch the low or high of the day. So let's just look at, so this is November's trading. 1, 2, close to it, not 3, 4, 5, close to it, not 6, close to it but not. So 6 times for the last 12 trading days, so 50% of the time, which means if you're getting at the high or in the range of the high, to be break even you need 1-to-1 risk to reward. And you can see if you're getting in below the low, getting in below the low, above the high, getting in below the low, getting in below the low, closing above the high, getting in above the high or below the low during that time, this time, getting in below the low, closing above the high. You can get much more than 1 to 2. using just these rules and a weekly expansion can do crazy numbers. But with that being said, if you're adding your own rules, say no trading on Monday, you're already cutting out 2 of the losses. So you're cutting out this day, you're cutting out this day. Let's just show you this. This is Monday, Monday's trading. This is Monday's trading. If you're cutting out the 2 Mondays, you already pushing that up to 6 out of 10, 60% instead of 50%, which is a massive improvement. And yeah, use this as you'd like. This is not a be all end all. This still needs to be blended with entry patterns, so it's like trend lines or support resistance accumulation, supply demand, whatever that's called, and indicators if you want to, but these are the times where there's usually turning points in the market at these times. And there are rules for when you need to stay out the market and when you need to engage the market. So for instance, Monday's trading, if you don't trade on Mondays, you would have avoided 2 days where there wasn't a low high of the day during the 2 to 5 a.m. window. Okay, that's it for today, or for now. There'll be another 2 videos coming out really shortly, also about time and time windows and what to expect. I'm gonna use the exact same trading range like this. What's this? 16th of November to 30th of November. There's 12 days of trading for that as well. So if you guys watched this video and enjoyed it, leave a like and continue on to watch the next 2 videos coming. Peace.